So here I have just an example. I have an investor, taxable income $130,000 year after year. He can buy 5 franchises. So the payment 5 times 10,000, $50,000. If you want to carry back your deduction for this year and next year, you will have to go to 0. And after that, you can carry back your deduction. It's for this reason that your tax savings for the first year will be $86,000 less your $50,000. You will create a new cash flow of $36,000 after the first 12 months. The second year, same payment, tax savings $78,000. So cumulative cash flow, 65. The third year, as I said, you have a lot. So by the end, the new cash flow will be $45,000 of new cash flow. And if you didn't use your exoneration about the $800,000, it would be tax-free. So it could be more than interesting. Now, I want just to explain what could be the transaction in the next 3 years. I will say in 3 years. The goal of the franchisor and myself are to have the majority of the group of this project. The only way to have it would be to do a special transaction with all the franchisees. Because you can imagine that the majority right now, it will be for the franchisees. If we have a transaction tomorrow, it would be 80% for all the franchisees and 20% for the franchisor. Why? Because all the territory, the value of higher than the IP. So, we're in 3 years. We call a meeting, special meeting, with all the franchisees, and we'll explain the result for the last 3 years. And we'll explain the projection for the next 7 years. And we'll ask a simple question. You want to stay? So you keep your loan and you keep 100% of your asset, so you would depart with the big value in the future, because you believe that it will have big value. Or you will sell. And what could be the transaction? Will we see, because we will roll over the franchise again, share of a Canadian company, Edge of Command manager, we will receive 126,000 shares. Why? Your loan is 100,000, and the 3 payments, 26,000, so 126,000. And after that, the franchisor will call you and say, look, I would like to buy your share. But you won't be able to buy all your shares, because the balance of your loan in 3 years will be $91,000. So the only shares that you will be able to buy, for example, will be 91,000 shares. So after this transaction that could happen, for the franchisor, you will have 73% of the company. So you have a majority. All the franchisees made their cash flow, no loan, and you still have 35,000 shares. So the difference between 126 and the 91,000. And what would be the value of these 35,000 shares?
Depends on the buyout.
I can guess between $1 and $1 billion, somewhere in between. I can bet. We can I don't know what would be the value. For sure, our goal are to build a big value. But for you, you will start with $18,000, and after that, if the value is an additional $1, it was a good deal. If it's more than that, it will be just huge. Now, to have this type of report or recommendation, because it's not easy. If you have a prospect in front of you and you know that the taxable income would be $100,000 or $200,000, what would be the best strategy to maximize their cash flow? So we developed a special software to do this calculation. What we need, it's a questionnaire. And now, before I talk about it, in the last 3 months, more than 85% of all the closing that we're doing all across Canada are with the questionnaire. And the percentage of closing with the questionnaire is more than 75%. You know why? When you have a meeting with your prospect, the first meeting, it would be just to tease your prospect. Just be sure that we'll give you the information here. After that, you send us the questionnaire, and just next week it will be electronic, so it won't be on paper. You will be able to do it on the web. So after that, to receive it, it will take, I will say, maximum 2 days. We send you back. It's a report of 12 pages. To be used for the accountant, if the accountant wants to, it's just amazing. And when you start to talk about it to your prospect, now you're talking about cash flow. You're not talking about a dream that maybe in 5 years the value was just amazing.
That's called patience money.
Yeah. Now you will talk about the money that you will spend now and the tax saving. And you will say, so I will make $36,000 in the next few months? Yes. Believe me, the decision would be, they will take their decision on this number for the first year. Because for them,
Cash is king.
and most of the time, they want to find a solution for now.
Yeah, right now.
Because for the last 6 years, they have problem with the credit card, with the bank, it's all the time, they just postpone the problem. And now, they have a solution for $36,000. Less or more, depending.
Okay, Claude, just quickly, let's go over that again just one more time.
Yeah.
This scenario. So in 2014, we had an income of $130,000.
Yeah.
Okay. Explain that $50,000 again to be please, that disbursement of the franchise.
Okay. Here, the hypothesis is the taxable income for this investor, $130,000.
Correct.
The year 2014, before they will carry back the deduction, they will have to take $130,000 of deduction. They have to have zero of taxable income because before they will carry back.
3 years. After
3
that-
years. You can go 3 years.
That's what I missed.
And you can choose what you want. You can, for example, you have a prospect that you have a special revenue here, a big capital gain. So you can just put the deduction on this specific year.
Gotcha.
You're doing what you want.
Right.